Chit Chat Stocks, a podcast that helps you discover your next great investment. I'm one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. This is our weekly Power Hour episode. We do these live on Thursdays at 5 p.m. Eastern Time, and we talk all things financial markets. If you want to ask us a question, head on over to YouTube and head over to the comments section on YouTube, Chit Chat Stocks. And like I said, live 5 p.m. on Thursdays, so you can ask us questions there. And then we've got tons to discuss today. I'm sorry if I'm forgetting anything as far as the talking points. I know we are supposed to say a bunch of stuff at the start here, but we've got Amazon, we've got Nintendo, we've got Google earnings, we've got the software meltdown. Is that a fair way to describe it, Brett?
It's never ending. So I guess that is fair. The I made a joke a couple of weeks ago. It might have been in the subscriber chat. It might have been on Twitter that I'm getting interested in software stocks. So we have 20% farther to fall from here. Luckily, I listened to the devil on the other shoulder and didn't buy any software stocks. So maybe now finally they are a buy. How is it you're not fully 100% invested in software stocks, but how has it been feeling having those in the portfolio? Because it's different. It's much easier for me just seeing those on the watch list than actually seeing that number go down in the brokerage account.
Yeah, it's amazing how in the watch list it's exciting, and then in the portfolio it's just dreadful. You look at it like I don't know. You look at it like you can't buy more, like you've already lost money. But it, it's amazing as I look at a lot of the software stocks that are in 50, 60% drawdowns, and some of these are in 70% drawdowns. And you look at them and you think, okay, you can make the case for this to be undervalued here. But the fact that it's in a 70% drawdown and you can make the case, it makes me think like what on earth were people what on earth were people thinking a year ago? Like cuz it's
Oh, yeah, I know.
you're
It's
still
crazy.
you still have to make some like reasonable or reasonably aggressive growth assumptions for these to look like good investments from here. So it really is astounding the valuations that these were trading at a year or two ago.
I
I
think
mean,
if we want to go full circle back to 2021, SaaS was one of what I like to. Some people are calling it, and invent this term, the rolling bubbles of the last decade or so. That was when that seemed to peak. And when you look to today, I feel like we're getting close to the official 5-year washout of the software SaaS. I guess AI is causing the carnage here, but the full popping of that bubble. We're finally seeing some reasonable valuation. But I was even doing a short article for the Motley Fool today on the trade desk, and I go, oh wow, stock's down 60%, down 80% from highs. Let's check out that PE. Maybe it's interesting. And I was kind of looking at it. There's a lot of hair on that. It's in a different spot than people probably thought a few years ago, but PE is still 30. It's nothing to guys sniff at. It's down 80%. PE is still 30. Yeah, I have nothing else much to say, but I will for the live audience, I guess. But most people are listening tomorrow, Friday morning when this comes out. There will be putting the finishing touches on it right now, having my handy editor Ryan read it for Grammar, a research report on a software stock we've been following for a long time that I think is getting interesting wicks that'll go out to the newsletter tomorrow morning. But for the podcast here, I got nothing else to say. You have a list here of huge stocks and drawdowns. I saw people asking about it. Apparently today, Anthropic. Maybe Claude will just start releasing it for Anthropic now. We'll just automate the entire business. They released a financial analyst or something along those lines. It said it'll do the work for you. We'll
it's
see.
amazing how much people react to a lot of these product launches. And this recent sell off, I think all sort of comes back to the launch of Claude for non-devs, which actually wasn't anything novel. Like, so Claude Code was launched, what, a year ago now? And then I think like 2 months ago, or maybe less than that, there was basically, they released sort of Claude Code for non-developers. And that was kind of all of a sudden what sparked it. But I realized like nothing changed. They just, nothing changed really, other than like they just launched the product to a new demographic. And then all of a sudden people open their eyes to it. The part that catches me off guard here is the selling is very thematic. Like it's not specific companies impacted. It's just the whole software sector is being sold off. Like it, no one really, other than cybersecurity, which is kind of its own beast, no one really seems immune to the software sell off. Like,
Well, yeah. For example, there's the company I've been researching comes to mind. Wix serves small businesses, an entirely different market. There's totally different dynamics there versus someone that's enterprise for large businesses, such as a ServiceNow. That's an entirely different ballgame. But everything's just getting sold. It's a thematic thing, and I feel like if you go digging here at this moment, there's a lot of babies that could have gotten thrown out with the bathwater. For example, with Wix, there's no IT departments at these companies. I don't think the restaurant owners are going to be experimenting with vibe coding, QuickBooks, Wix, Square point of sale solutions, all that stuff. And frankly, they don't have time. They probably work 12 hours a day managing their business.
I I think what would pause this entire sell off is if Anthropic just released a list of all their software vendors. If if Anthropic was using all these software vendors, which they are,
That's
I'm
fair.
sure they are, they it would be proof that it's still easy to go with an outside vendor. I mean, I work at Fiscal.ai. We're a very AI forward business in that, we're using it for core operations.
It's in the name, of
We,
course.
if it's in the name, it's got to be.
I mean, I'll speak for you guys. You don't have to speak, because yeah, I don't know. It's company on company stuff for who you're competing with, but you guys are from my perspective is trying to disrupt some of the legacy players like a FactSet, like a whoever, like even Bloomberg, slightly different, but within that realm, making it cheaper, making it more accessible in the browser, using AI tools. But it doesn't mean a lot of these legacy softwares are going to go to zero as long as they can keep pace. And yeah, you're gonna have to keep pace with product innovation, but that's been true forever.
I mean, we have a core business that we are using AI to try to be innovative in the financial data space. But that doesn't mean we're building our own Slack. That doesn't mean we're building our own CRM. And obviously, at the massive, massive scale, Amazon, Google,
Well, they do,
Microsoft,
yeah, they
you
do.
make it internal because it makes sense. It's worth the spend to have 20 developers on that product because you have a million employees that are using the service. So it's like the ROI is there in and of itself without having to sell it to anyone else. But for most of these companies, it really doesn't make sense. And it's some of the biggest beneficiaries are these companies. Like some of the best tech talent that's leveraging Claude Code, Claude's agents or whatever coding agents that are popular. Cursor, I can't remember. Replit is another big one.
Base
It's
44, Wix,
it's the
that
it's the
Wix owns, yeah.
developers at these big tech companies for the most part that are not necessarily big tech, but it's the development departments or the IT departments at these companies. I think the product velocity and the platforms are going to improve and it's going to be more useful and valuable to a lot of the end customers, which is going to result in higher contract value, is my suspicion. So it really does remind me of the search is dead narrative from 2023, I guess it was, where, and I know Google was like the one that was the most impacted by that, but you had a lot of other businesses that the belief was traditional search is dying. Anyone that benefits from traffic from traditional search is going to implode, that kind of thing. And that didn't really seem to be the case. Some of those companies did get hurt because Google basically took the search results and made them their own through AI answers. But
Yeah, don't tell the Motley Fool that that is, prime example number one.
you look at like SAP, go like good luck, like trying to tell the head of accounting at a Fortune 500 company, hey, I know you've been using this as a system of record for 30 years. But actually, we've got these two devs that just vibe coded a new accounting solution and we're going to migrate off. I know you got to report next quarter's earnings in a week, but I need you to get it perfectly done on this new tool and we're just going to set it and forget it. It's not realistic at all. Like this isn't it feels like one of the most random sell-offs a little bit because I'm not actually seeing this anywhere. I've seen a whole bunch of stories on Twitter of no, we actually built our own internal system. Is there a single like big Fortune 500 or large software company where they're actually losing deals
I don't know.
from
Maybe
this?
I'll ask Gemini that. And yeah, I appreciate your rants on this, and I do agree uh, with what you're saying. But I think it just presents buying opportunities, and the companies that'll repurchase stock, return cash to shareholders, be smart with their capital, well, shareholders will be happy over the long haul. But this is one of the weeks, Ryan, where we have basically a million things we could discuss. I think it's the heaviest earnings week of the season. We could probably go for 2 hours if we wanted.
If I can just,
And I
before we get to Google or Amazon earnings, because I know everyone wants us to talk about that, and I will just mention the stocks I've been buying or have bought.
oh, all right.
Monday.com, because I've talked about them recently, so we're not going to do like a whole episode on them. Monday.com, Adobe, and then Remitly has kind of, it seemed like had some sell-offs adjacent to the software space. It might have had its own like uh, rating adjustments from the investment banks, but it seems like it's kind of trading in the same band is what it feels like. But anyway, I'll leave it there. Monday.com and Adobe are sort of the two that I've been buying.
Yeah, Remitly, I can't figure out why it keeps falling, but yeah, I think it's cheap as well. And we do have a comment here that says, "You remember the landing scene in Saving Private Ryan?" That's me as a concentrated Constellation Software shareholder. Hey, you're experiencing normal uh drawdowns for once as a Constellation shareholder. You're making up for years of just 20%. But yeah, we get a lot of people here asking about Amazon, Alphabet. Someone says +1 vote for the 2 hour stream. If we maybe go a couple minutes long, if we have an extra topic at the end for this one. But let's talk Amazon and Alphabet. I mean, we just had Amazon an hour before this recording. So maybe we can go now and just do them first and then talk about Alphabet. Stock for Amazon's down about 10% after hours. We haven't listened to the call. I think it's ongoing as we speak. So if anyone in the chat sees anything on the Twitter universe, maybe let us know if it contradicts anything we say. But let me just go through the quick numbers. 12% total FX neutral revenue growth, steady growth of 10% in North America for retail sales, 24% AWS revenue growth to $35.6 billion. Fastest percentage growth in a long while. But what I will add here is that AWS quarterly revenue grew by $6.8 billion year over year. So they added $6.8 billion in quarterly, it's not ARR, but I think that's a fine metric to use.
Wait, sorry, repeat that.
So they
6.8
had
billion added relative to last quarter or last year?
last year over year.
Okay.
It's so there's probably some seasonal spend for retail and stuff like that. It's not. You might want to do quarter over quarter or ARR. This is just illustrative for how fast their competitors are growing. Google Cloud added $5.7 billion. My question is, when do we worry about AWS losing market share? Because the percentage growth, and you're going to get to it when we talk Alphabet next, it feels like AWS, they keep posting slightly slower revenue growth on a percentage basis, but historically, they were adding more absolute dollar figures to their ARR. And I feel like the rate of that Google Cloud's growing, they could close that gap pretty quickly in 2026, 2027, 2028. It's just something I would be maybe looking at as an Amazon shareholder. Ads 22% year over year revenue growth. We saw a little bit of margin expansion, even though there were some severance hits this quarter from the layoffs. I think with ads growing this quickly and with AWS growing this quickly, you probably need to expect major, couple of percentage points margin expansion in 2026. As I mentioned, stock down after hours, probably in a market cap of about $2.2 trillion. Given they did, I think, $80 billion in earnings this year before taxes. In 2026, you probably could expect them to do 100 billion as long as the severance charges roll off and they keep getting a little more operating leverage and keep growing across the board for North America, international, and AWS. Is that cheap? I mean, you're an Amazon shareholder here, Ryan. Probably maybe 22 times 2026 pre-tax earnings. What are your thoughts on the quarter? And maybe this is the first time you looked at it, and then we can kind of look at Alphabet as well. Oh, I should mention the Capex guide. Bearing the
Yeah.
lead. $200 billion across the business in 2026. I'm assuming the majority, maybe 80-90% of that is AWS. Alphabet and Amazon are going big. Go big or go home, I guess, for this AI data center spend. Just wait until it's in space.
Yeah.
We'll get to
Yeah.
that later in the episode. All right, what were your thoughts?
The quarter itself looked good. Like if you just stripped out the capex guide and the uncertainty there, it's a really solid quarter all around. I mean, 24% year over year growth in cloud is their fastest growth rate in 3 years off of their largest base. And like you said, it doesn't look as good relative to Azure and Google Cloud growing at 39% and 48% respectively, I believe are the numbers. So Azure's growing 39%, Google Cloud 48. But nominally, Amazon is still growing faster. They're adding more revenue sequentially, I believe. I got to double check the numbers there, than Google Cloud and Azure. And it actually, I think a lot of people underestimate how close in size Google Cloud and Azure are to one another because Microsoft doesn't report
Yeah.
Azure revenue independently.
They play little accounting games. They have that segment of cloud revenue, which includes more than what Google Cloud and AWS would include.
Yeah, it includes like Office subscriptions. It's
Let's get a boycott or for some sort of, you know, something. We gotta get that fixed.
and
Let's
I
just, for the
yeah,
sake of Fiscal.ai, for
true.
every investor out there, let's just get some apples to apples comparisons, huh? We got a friend at TSOH Investment Research. He's got to do these estimates themselves. Microsoft, just tell us the number. Just tell us.
And that's the part that frustrates me is they're like,
You have the number.
yeah, they're like, well, cloud, our business is cloud. Like we can't just disaggregate the two. They're integrated. And it's like, but you report Azure's revenue growth. So you obviously have their revenue itself. Why don't you just report that? Anyway, that's kind of a
All
separate
right.
tangent. I thought
Before
the
we get
quarter was
to
good.
Amazon, okay. Before we get to Amazon, we have someone in the comments here. Will Ryan be buying more Amazon if this? I'm assuming if this after hours holds up. What? How are you feeling with the capex? I don't know. What do you think?
Ordinarily, I would say yes, but everything else is selling off so much lately. I mean, we can talk about like pretty much my all my largest holdings seem to be in
I'm
massive
not even
drawdowns.
in much. I'm not even in much software stuff, and there's some drawdowns. Hey, it hasn't been a bad week to have a small percentage of the portfolio shorting some. I try not to swear. We got to come up with another word for not saying blank
Crapcos.
co's.
I don't
Crap
know.
co's. All right, good. Yeah, crap co's.
There you
That's
go.
fine. That's fine for the car ride. A lot of it's a good week to be short some crap co's with a small percentage of portfolio. But yeah, I have other stuff: Coupon, Oscar Health, Remitly, some stuff that's not even in software that's drawing down. A lot of stuff. So I get where you're coming from. It's actually hard. Nintendo. I mean, what's going on there? But
Yeah. The
yeah,
the part
it
that
looks cheap.
the part that throws me off here is that everyone's concerned about the Capex guide. And this applies the same for Microsoft. It applies the same for Google. The stocks all sold off on the Capex guide. And for context, for anyone that we're going to talk about Google in a second, probably, but for anyone that didn't follow this week's earnings, basically all of them guided for massive Capex growth. Google's expecting Capex to like double. I think Amazon's is expected to go from like 130 billion to more than 200 billion. I might be getting some of those numbers wrong,
200,
but
200 billion. Alphabet about 185. Meta, they don't even have a cloud division. They're doing over 100 billion next year. And we're getting to the point where almost all of these businesses, maybe not Microsoft, I haven't checked that, but all four of them are getting close to putting in all of their operating cash flow back into Capex. I think that could be what people are finally concerned about, because what happens next?
but are they? Because isn't it ironic that people are like, well, we don't know what the return on that Capex is going to be, but also AI is going to disrupt enterprise software and we're going to sell off all the stocks because of it. So it's like, which
Yeah,
one
the
is it,
value has
Mr.
to go
Market?
somewhere. Yeah.
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 I I just don't see how they could both sell off simultaneously. How can you sell off on a big investment in AI and then sell the stocks because they're going to get hurt by AI? It just, I don't know. It
At
feels,
least they're not Oracle. Did you see Oracle tweeting like a bank from 1931?
uh,
Did you see that?
yes. Did you see the interview with Jensen Huang about his quote
I
unquote
have the
commitment?
Oh, I have it in the bubble watch right here. I have a link directly to that video. You mean the one on the street in maybe Taiwan? I know he's always in Taiwan.
Yeah, where
He loves
his
doing
one
random stuff in the streets of Taiwan and Korea. They're like, there's Jensen getting some fruit.
yeah, it let's just talk about this now because it's entertaining. The quote unquote $100 billion commitment from Nvidia to OpenAI
Can I play the
was
video?
I don't, sometimes
Will
I
it
worry
pop
that
up?
the audio
I have
doesn't
it
work
loaded
right.
up. It
Do you
doesn't
know that
work.
it's
Let's
going to
show.
play in the record? I mean, we can try it, but we might be able to hear it, but the audience might not. That's what I'm worried about.
Well, I think we've done this once, but we can we'll try it for a couple seconds and the audience can tell us. If not, well, I don't know. We'll cut
I
this
guess we'll
out
cut
of
this out
the
somehow.
recording. I'll cut it out in post production as the editor. All right, let's share the tweet here. Someone said, JJ Joseph Jacks said Jensen's not happy. All right, let's see what happens here.
NVIDIA is not going
Can you hear that, Ryan?
Yes, I can.
All right, I think it's working then.
to invest as much as 100 billion in OpenAI.
No,
Is that for the current run?
we never said we were going to invest $100 billion in one round. That never was said.
But how about the
Yeah.
overall commitment? Because last September, you and OpenAI
There was never a commitment. It was if they invited us to. Let's start over again. They invited us to invest up to $100 billion, and of course we were very happy and honored that they invited us. But we will invest one step at a time.
What do you think?
It's what a reach. Because maybe I'm mistaken, but I'm pretty sure OpenAI probably leaked this, or someone involved with OpenAI leaked that NVIDIA was investing or committed to investing $100 billion. Inviting someone to invest $100 billion is very different than getting $100 billion. You could do
Yeah, it's
that to
like
anyone.
back in I'm inviting you to invest however much you want into my new investment fund. You are welcome to do that. And that's the same type of energy. I feel like Altman and Jensen were talking, or maybe the teams at OpenAI and NVIDIA were talking. And OpenAI is going, hey, look, we got these spending commitments. We got 100 billion slotted out for you. And then Jensen's like, cool, yeah, just buy our chips. And then they go, all right, you're in. And then he goes, we never signed anything. Yeah, hey, look, you were very skeptical about this type of stuff. I think at the time of the announcements. Correct? This is kind of
Yeah.
what you would thought was going to happen. OpenAI was kind of just talking out of its behind, and they actually don't have signed stuff. But what about this Oracle? Or like you go to this tweet, they go, the NVIDIA, this is a direct quote from the Oracle account, verified account. The NVIDIA OpenAI deal has zero impact on our financial relationship with OpenAI. We remain highly confident in OpenAI's ability to raise funds and meet its commitments. That sounds
Yeah.
like a bank run. That's like a bank that's about to collapse.
We are solvent. Don't take your money out. It's
Yeah. He's
so,
like, I wasn't until you said that.
yeah. Yeah, I saw people like pro tip, don't ever tweet something like this from a corporate account. I think that's right. I mean, if you just don't say a word, say anything about it, it's silence is better. It's yeah. I am inviting Jensen Huang to my next birthday party. Uh, and now he is committed. He is
And
committed. Jensen
Jensen,
Huang has committed to coming to my birthday party. That's, I mean,
Jensen, you have an open invitation on the Chit Chat Stock podcast. You're welcome anytime. Yeah.
so if
It's
we just put
curious.
out that he's coming onto the podcast, he's committed to the podcast, does that benefit us?
Yeah.
Is there anything wrong with that?
That's true. That seems to be Sam Altman's mentality. I gotta say, you should. I made a I don't know how serious I sounded on the podcast, but I said there was a small chance that OpenAI isn't around in a few years. The equity goes to zero, whatever the equity is. I'm not even sure there is any since it was a charity. I would raise that percentage to a decently worrying size now because you have Gemini's market share going like crazy. It's up to like 25% in consumer, and Anthropic is going crazy on the other end, which is enterprise. And you have the reaction from Altman when Anthropic does a advertisement for the Super Bowl, a little cheeky advertisement about OpenAI deploying ads, even though Claude isn't used at all by consumers. I gotta say, there's a lot of sign. This feels like, doesn't it feel like FTX at the end? Not in the same way financially. Obviously, it's a different, crazier business, but the energy coming from Altman is similar to SBF, where he's like, I got to talk everything. I'm going to talk my way out of this. I'm just going to respond to everything. I'm going to write a paragraph in response to a Super Bowl ad. It,
Yes, Altman
yeah, I
gives
don't
me
know.
the investor ick 100%. It's there's something not right. There's just red flags galore.
Here's what I thought recently is that it's who the people who watch The Social Network and think that Mark Zuckerberg is actually like that. That's who Altman's like. Kind of just win at all costs, sign these deals, backstab everyone.
It
That's how it
makes
feels.
sense now why the Anthropic was built. Like, it seems like he would be someone that's probably a little hard to work with. I guess that's evidenced by the board ousting him a while back. The
Everyone else leaving. Yeah.
And then, yeah, what's his name? The founder of Anthropic left OpenAI, if I'm not mistaken, early on.
So
So
the chief scientist officer and the CTO, they all started their own companies. Yeah.
yeah, let's talk Google. There's
It's
some
still
fun
Google.
stuff
Yeah.
here.
This.
There's some fun stuff here that doesn't have to do with Capex and AI, which if I could just not say those two words for a few weeks, that would be refreshing. The numbers were really good across the board. Search grew 17%, cloud 48%, which is a massive acceleration. Their backlog, also, this seems to be a recurring theme, is OpenAI committed to. It seems like OpenAI gave like big commitments to all these cloud providers, and now all these cloud providers have to report a massive backlog jump. That's like worrying people, but they also probably don't even. A lot of them aren't like
It's not
bragging
just
about it. It's
don't
just
worry
like
about
they
it.
have to. Like I remember even like Microsoft said like, yeah, our backlog doubled and 45% of it comes from one customer. And they like had to mention that on the call and everyone was concerned about it. Anyways, cloud 48% growth, subscriptions 17% growth. Subscriptions is turning into a pretty impressive business for Google there. YouTube just 9% growth. I'm going to come back to YouTube because I actually thought it was a very impressive quarter despite single digit revenue growth. And then network -2%, other bets -8%. Nothing both those are kind of inconsequential segments for Google overall. But a couple things to note. With YouTube, I think they are putting up, I can't say enough great things about YouTube, honestly. They now surpassed $60 billion in combined revenue between advertising and subscriptions. So, and advertising's at like 40 billion, so subscriptions for YouTube's at around 20. And they grew 9% on top of an election cycle last year. So, and a lot of that
Fair point.
election advertising spending, which is a huge boost for all advertisers, rolled off. So they're putting up big advertising numbers while pushing all their customers to go to ad-free solutions. So I just, what a business. Honestly, I wish, I saw some tweet today about Google maybe creating that this might be the best business of all time. Maybe that's
Yeah,
some,
welcome to 5 years ago. Yeah.
yeah.
I've been banging this drum. I haven't owned any shares, but it's nice to be psychologically long and correct, I guess.
And it's also one of the few juggernauts of a company that customers like and are happy about, that they really like.
Oh yeah.
Meta
Can I
people like, there's kind of a stench with Meta, because of the data breaches and Zuckerberg a long time ago.
let
But
me give you, there's 3 brands that Americans trust the most out of anything, including like this can include the executive branch, Congress, the police, FBI, or companies. The three biggest are, or that say I trust them the most: Google, Amazon, and the U.S. military. That's it. Those are some companies that if you go get this done, they're gonna get something done. Like they're just
maybe
reliable.
Nintendo.
Nintendo, yeah, well, Japanese, yeah, not an American company.
Yeah. And Amazon, people, it seems like customers push back against Amazon a lot. Like not customers, but like just civilians, I
News,
guess is the
media, yeah.
a lot of it has to do with like Bezos just being one of the richest people in the world. It's the same
A
thing
meme.
with,
Yeah.
yeah, basically. But Google, I think a lot of it has to do with the fact that they just give away so much value for free. So much value. And they just give it away. And I think it builds up good mind share with customers. Anyways, I thought the quarter was really good. Again, Capex was a massive guide, but for them, like if they are booking this growth, or if they are booking these, I don't know if they have another option other than to continue to invest in the data centers. Like I guess they could tell these people no, but they're just foregoing potential revenue here. My hope as a shareholder, and I don't own a ton of Google shares, but my hope is that they are qualifying these commitments well, and before they build, getting a true sense of, is this demand real, in the same way Taiwan Semiconductor is.
Yeah, that's fair. The one thing you can say for Alphabet over Amazon, Meta, probably even Microsoft, because a lot of Microsoft is just not internal AI stuff, it's partners. And I get that Meta has the advertising efficiencies, but I'm a little skeptical that they can spend $100 billion a year and get an ROI on advertising. That's not all of it whatsoever. But with Alphabet, you have many different irons in the fire that can get an ROI from new Capex spend. You have one, obviously Google Cloud, which we mentioned, but two, you have Gemini gaining a ton of market share now. And that's another way they can get ROI, as opposed to you look at someone like Meta, they don't have their own cloud and they have chatbots that don't get used. And then on top of Alphabet has Workspace that's smaller, but then you have YouTube that can benefit from AI across the board. So I think for them, throwing up that $180 billion is less nerve wracking than Amazon or Meta, because I see a clearer path to ROI. If you look at, oh gosh, I lost my train of thought. Well, just respond to that part.
Yes, yes. There's not only optionality, because I think optionality is a loose term for, I think a lot of people abuse the word optionality, but a lot of highly successful businesses that are, there isn't just any one core reliance, I guess, for, I mean, obviously search is massive, but they have now shown how adaptable they can be with search. I see a lot of people saying, I think Google has an unfair advantage with all the data that they're pulling in from their own platforms. Yeah, they had an unfair advantage a year and a half ago when
Yeah,
everyone
they've
says search is
unfair advantage
dying.
forever. Yeah, they've had an unfair advantage since the beginning. It's called business strategy. They bought DeepMind for 150 million. They bought YouTube for, well, DeepMind maybe was 500 million. Whatever, still cheap. They buy YouTube for 1.5 billion. They build this whole ecosystem, a lot of it from scratch. You start the semiconductor business much earlier than everyone. You see the cloud business pretty early. Meta doesn't see it, Apple doesn't see it. You see the AI assistant business, you invent the LLM, you invent the transformer, all this stuff. Yeah, sorry, they're just extremely smart. When you hire all the best, or if you have something like 20% of the smartest AI scientists, software scientists, scientists in general, and engineers in the world working under one company, well, good things are going to happen.
I've heard they make it the interview application process at Google is just like dreadful. It's a very difficult process,
You have to be
which
very smart.
yeah. And on the one hand, I mean that's, I don't know, probably discouraging for some people, but it probably prevents over hiring to the same degree you have at other companies. Now, it's not to say that they've never needed to trim the fat. If you ask,
Chris
what's
Hone, that letter.
Chris Hone, you know,
They were right. I mean, he was right in 2021 for sure. They hired too much. It's okay.
yeah, but they haven't had to do successive rounds the same way I think pretty much all the other tech companies have. Maybe not Microsoft, I can't remember, but Amazon for sure. It is, yeah. I feel like I could talk forever about Google because every single business there's something to brag about. I use Gemini every day now. I use Google Search every day. I use G Suite every day. I use YouTube every day. I mean, I'm
Oh
about
yeah.
as much of a power user as you can be. So
I guess I'm, yeah, power user as well. Yeah, I think it's the best business collection of businesses ever. Is it the best single business ever? That's debatable. I mean, Google search as their largest one. But is it the best collection? I think so, especially given the usage, earnings, growth trajectory, and just pure technological innovations like across the board.
Tyler says, my MSTR MicroStrategy. Sorry for the correction, but I tell you, it's strategy
It's
now.
strategy now. Yeah.
Reported negative earnings per share of negative $42.93. LOL. The world would be better without that company around.
Did you see? This is my note in our notes here. Bitcoin is crashing and Michael Saylor is crashing out. That's some good teenage lingo right there. Is that
It
that
is,
good?
yeah. And I mean, maybe we can take a second to talk about Bitcoin because I've seen a lot of commentary around it, and I know we're
Oh
no
wow!
experts
Oh
here.
wow! As of this recording, we're down to 63.
Whoa, down
Yeah.
13% today.
I-
So here's, I don't want to, I don't want to pat ourselves on the back too much
Well,
because
it could go up to 100K tomorrow. Yeah.
it could go up to 100K tomorrow. And also, I think we patted ourselves on the back in previous drawdowns and it made us look foolish. But there are a lot of levered or embedded leverage. There is a lot of embedded leverage with Bitcoin that can cause massive withdrawals, especially with these ETFs now. It seems like Michael Burry did a whole bunch of writing on this, and
Yeah. What do you think of? Are we gonna renew his Substack? He thinks GameStop's the next Berkshire.
um, I like some of his writing. It's entertaining.
We'll
It's
see. It's
entertaining,
what
and it's super
we
cheap.
gotta.
Actually, it's not that. It wasn't that expensive when we bought it.
Yeah, yeah. We have 11 months for him to. We'll see in 11 months from now. But I thought that his GameStop thing was a bit out there.
Yeah, but with Bitcoin now, this is kind of the point I made with Bill Miller when we studied him, which what was the approach they took? I can't remember the term for it, but basically like uh, the odds of him being right when they bought it, I think 10 years ago or so, was extremely low. I think it was like
Kelly
he,
criterion type bet.
yeah, he pegged it, I think, at like 2% probability of being right. I don't know how on earth you arrive at a probability like that. Whatever. He did. But the upside, if he, on that 2% probability was, uh, 1,000 bagger, whatever. Now, he was still holding it last we checked, or last interview he did. He said he still owns Bitcoin, but it doesn't make any sense to me because the probability shouldn't have changed because nothing fundamentally has changed, right? Like it, the probability of Bitcoin being like a pervasive currency used for anything other than illicit activity, I don't think that much has changed over the last 5 years, really. Like
It's probably
people,
lower, if anything.
you can isolate certain incidents of people using Bitcoin for currency, but let's be honest, has anything changed about like how commerce is done? And for
No.
anyone that's bullish about Bitcoin or whatever, listening to the show, when's the last time you bought a good with Bitcoin? It's like it just hasn't really changed that much. So I don't know. We might have timed that episode pretty well because it seems like using that same Kelly criterion, he should have been short Bitcoin if you
Yeah,
can.
he should. Yeah. Well, it's really hard to talk about because there's not any fundamentals to go off of. It's kind of like when we talk about gold or silver. He goes, well, it's going up. People are buying. Yeah.
It's going
But
down.
here's what
People
I
are
will
selling.
say.
And Michael Saylor is getting out.
There is, yeah, sailors. He's posting all caps, hodl, and he has this video where he just goes, "Close your eyes." It's really good. He's in this office, in his lair. Goes, "Close your eyes and imagine 10 million a coin, and just think, would I sell? How?" And he's like, "How happy are you gonna be when that happens?" I'm like, dude, if Bitcoin goes below a certain price, you're going to zero. And what I've seen, this is not. I am not a journalist, so this is not sourcing. This is seeing people tweet things. There are rumors that Binance is, which is by far the largest exchange. There's rumors that they're gating withdrawals and that they are insolvent, similar to FTX, which would be quite the ironic story because SBF, founder of FTX, is sitting in prison. And the reason FTX, one of the reasons FTX went out of business is because Binance, I think, started. I forget that story, but it is pretty dramatic. It was like there was like a double crossing. But either way, Binance was in it for FTX's fall because they were kind of business enemies. And if the same thing happens to Binance, one, what's the credibility on this industry? Nothing. And two, SBF's probably sitting in prison just going, man, if only I could have just kept that Anthropic investment, I'd be sitting pretty right now.
What do you think the odds are that in 10 years, like no one's talking about this? No one's talking about Bitcoin anymore.
Except us doing some weird history thing for
Yeah,
investing
except for
nerds.
us doing a history podcast.
Yeah,
It seems unlikely. 10 years seems unlikely. I could see a world where 20 years no one's talking about it. Because
the thing. Yeah. Go ahead.
and I know people are optimistic about what stablecoins can do for commerce, but I'm
And
talking
Venezuelan
specifically about
dictators.
Bitcoin here.
Yeah.
Yeah. It is funny that a lot of the price drop has coincided with the crackdown on illicit activity, if I'm not mistaken. Like there's been a big breakthrough in cracking down on some of the crime that's been using Bitcoin to facilitate it.
It's really hard to know why.
Yeah. Yeah, I guess that's true. There's a million reasons why. Here's the rule of thumb. If you have to rely on someone else to say something when whatever the security you own is dropping, so say for example, Bitcoin's dropping and you need Michael Saylor to say something because for whatever reason, same thing for me. Like coupons dropping. If I have to sit there and like wait for Baum Kim to say something, it's testing your conviction in any security. And it's a good point of like, can't borrow conviction, because when things go wrong, you need to have a better sense of what you actually own. And obviously with Bitcoin, it's hard to know exactly what you own, but I don't know. I'm
Well,
kind
you
of
know
talking
what
to
you own,
myself
is
there with a couple of the companies I've had drawdowns with.
Yeah, well, once you, and this is yet not news or anything, we've talked about this before, but once a stock you own goes into a drawdown, you realize either yes or no whether you actually have conviction in the business. Because there's some stocks I look at when I go, what is this price telling me? And there's other ones where I go, oh, I understand why it's dropping. Business is fine. I have a 5-year horizon. And when you look at Bitcoin, it's magic beans that are produced with electricity and computers. And I saw that for the first time ever, the cost to it's either mine or maintain or something. Again, not an expert on all this stuff, and people try to make it way more complicated than it actually is. It's the cost to produce is above the cost of the coin right now for the first time ever. So who's going to be incentivized to mine more and maintain the network? I just think if that gap is sustained for a long time, the common sense thing to me is that it could go to zero, because then there's no support.
What are the odds that in in a week it's back up to 100K and we just look like
Oh,
fools?
I'm not saying it can't do that, because then it's above the cost to produce whatever that is. But if it's below that for a long time, it's just not economical. I don't know. I don't know what's gonna happen.
Yeah. I kind of had this moment with Adobe, actually, going back to your like, you figure out whether or not you really know something. Because Adobe was trading at its cheapest valuation since the GFC. I think it was like an EV to EBIT of like 15 or something like that. And it seemed at the time, I think this was maybe like December, that the narrative on AI could not get any worse for them. Lo and behold, I think it's in a 30% drawdown since that time. And I'm kind of stuck on the fence now of like second guessing my original thesis of it won't be disrupted by AI. And I think part of that is maybe I need to get to know the business better. Whereas, for example, if Coupon drops, which it has, I have a better belief in the competitive advantages of that business, better understanding there than I think I do with creative software. Anyways, kind of a tangent. Let's talk SpaceX and
Oh yeah, this
xAI.
is the title. This is the title topic, the one where we bring people in. SpaceX and xAI are merging, and I
They're in
haven't listened to this
conversations.
podcast. I think it's officially happened because Musk did some tweet or blog
Yeah, I
post.
know, but I was seeing the headlines of they're in conversations, which I
Oh
just thought was
yeah,
hilarious.
just
Like
Musk
Musk
just
on both
talking to
sides of the
himself.
table. Yeah.
Yeah, he's
Talking
just
into the
writing on a
mirror.
notepad. He's writing on a notepad. Hit some ketamine, and yeah, no. But I will say, on its if you want to hear from the horse's mouth, Musk was on with, what is it called, Stripe Brothers podcast, Cheeky Pints,
Cheeky pint, yeah.
with the great interviewer Dwarkesh Patel talking to Musk. And I believe, and I haven't listened to it yet, this is just a clip that Musk implied something along the lines of that Tesla could merge with these companies to create one giant business. So my take, my take is getting closer to fruition, Ryan, and that would be one of the craziest moments in all of business history. And I hope it happens for our sake, just on the show. But should we just talk about what happened with this merger first?
Give the details of the merger, and then I want to make sure I find a quote from Musk that I saw.
Okay,
And
okay. I might have the same one in here. It's going to be a $1.25 trillion valuation, 250 billion. I wrote million, but 250 billion is attributed to xAI. I'd say for what is exactly? There's no usage of Grok outside of Twitter and Twitter ads. It can't be that much money. And then $1 trillion to SpaceX. My first thought here is what the original Twitter buyout investors think about this deal. because maybe this is a bit of a nice little return for them. I'm not exactly sure, but you're kind of in this new equity today that's about to IPO. I'm not sure how I would think about it. Musk said, this marks not just the next chapter, but the next book in SpaceX and xAI's mission, scaling to make a sentient sun to understand the universe and extend the light of consciousness to the stars! Exclamation point. There you go, Musk. That's what we're looking for with you. We're seeing rumors that SpaceX wants immediate inclusion into indices at IPO. Someone really wants to keep the stock price high, and this is something that's never happened before. I will say S&P 500 is not going to allow this because you have to be profitable for, I think, a year as a public company before you're included into that, and it's capped like net income profitability. If we look at the reported numbers financially, SpaceX is at 15 billion in revenue. xAI probably not much to add into the mix here. Maybe we're pushing 20 billion in total. Apparently, SpaceX is generating $8 billion in adjusted EBITDA, but this adjusted figure also doesn't include rocket launch costs. So you're taking all your depreciation and amortization, and then also the cost of our business. Yeah, let's just not include that. So that's not a real number. But either way, I mean, you're trading at well north of 100x times this fake figure. What I'm guessing here is both businesses. Okay, so they want to put data centers in space. Now, I sound like an absolute Alex Jones freak here talking about this. If for anyone that has no context, because this sounds like something that people should know about in normally. But if for someone that's not on Twitter or reading all the financial news, they want to put data centers in space to power AI for Grok. And they're going to try to do this by launching Starship dozens of times a year. This is one, you have to spend money on developing the AI. You have to spend money building the data centers. You have to spend money building the satellites. You have to spend money building the Starship bases, and you have to spend money launching these rockets into space. I think this combined company is going to be burning a ton of money, and they're going to need to raise so much capital. And that's the plan here. You're going to need a ton of money. And it's a crazy plan. We'll see if they can do it. I'm not going to say it's 100% guaranteed not to work, but there are a lot of engineering skeptics out there. I mean, it's going to be tough. I mean, data centers in space, that's a wild idea.
Yeah, building one, I have to imagine would be tough and costly. If you are a Tesla shareholder, the thought of merging with this should not excite you because
wait, what business is better? What business is better?
Wait, what do you mean? Oh, what?
I guess
Tesla.
Some people think SpaceX is. I guess Tesla's cash flow positive, but SpaceX has a much better growth trajectory. I see your point though.
But you're going to be burning so much cash. Honestly, I think he can pull it off. I think people will just love the story. They'll just they're
going to raise the money.
They don't care about the numbers. They don't care about the numbers. It's space. It's the future. It's Musk. That's all it is. That's all he needs to do. It's going to sell.
We're building a sentient sun to understand the universe and extend the light of consciousness to the stars. I mean, come on. Who wouldn't want to buy that?
This is a tweet from 2024, so it's a little outdated. But Elon Musk said, I've mentioned something like this before, but if any of my companies go public, we will prioritize other long-term shareholders of my other companies, including Tesla. Loyalty deserves loyalty. Is that securities manipulation?
I don't know. I don't know. He's already violated securities laws. It's okay. Many times, so maybe it doesn't matter. I know people like the guy, but that's the truth. The Solar City stuff is definitive now.
Yeah.
No one cares about it anymore, but this feels similar to the Solar City merger, where, okay, we need a bigger company to take on this one company that's burning capital. And I just think the biggest question is, will it work? Like, one, Starship has never launched commercially. Okay, we don't know how expensive that's going to be or whether they financially can pull it off. Two, you don't know whether data centers in space, which is so far from anything that's ever happened before, is financially viable. or even engineeringly feasible or technologically feasible. You know what I'm trying to say. And third, is Grok going to do anything in AI? Because that's another piece of the pie. I highly doubt that part.
At the moment, Grok appears to be used for two things. These are the prompts. At Grok, is this true? At Grok, show me this person in a bikini.
Bikini, yeah. Well,
And it's
apparently
image
SpaceX and
generation.
Tesla. Yeah, I guess
Pointless
SpaceX and
image
Tesla
generation.
use it,
It's
but that's
if my AC bills go up because Grok is generating bikini images, and it's gonna suck. It's
oh boy. Oh boy.
the
Yeah. Well, this will be a fascinating story to follow, and it looks like the IPO is almost like 90% likely to happen. But I wonder, and I know this isn't WeWork, I wonder if the financials are going to get a little skeptical with some of the, because you go through an IPO, you need the Wall Street banks to support you. I wonder what that's going to look like, or if Musk will be able to tell the story and kind of bully them into it.
I think Musk will be able to bully them into it. And I think for the investment banks, they know that they can just offload these shares. And they don't, all they have to do is tell the story with the S1. They don't have to, bury the financials, mask them as much as you can. They might not even look at them. A lot of the investors probably won't. You can sell it. They don't. Do they care how financially clean the business is? I kind of don't. I don't think it matters to them. Can they make money? That's the only thing they're going to care about.
Yeah. Yeah, there's going to be some fees. That's for sure. All right. What do you want to talk about? Uber, Nintendo earnings, PayPal earnings, which is a sad story, a really sad day for PayPal bag holders. And I have someone else I wanted to mention Palantir's blowout earnings, and the stock's still drawing down because it was trading at 100 times sales.
Yeah. Truly, I don't think you could have generated, you could not have had a better report if you're Palantir. I don't know how
AI
they
couldn't
could
have
have.
created a better report. Yeah.
Truly, yeah. But, and reading the report, I thought, oh my God, they're going to do it. They're going to somehow make it work on 100 times sales. But this is the
No,
problem
do the
with
math.
100
Still do the
times
math.
sales. 100 times sales on a business that's already pretty big, mind you. This isn't like 100 times sales on someone that just started generating revenue.
Biotech, yeah.
It's so hard to fulfill. And even a flawless report like this is going to hurt you. Honestly,
Have
I
you
think
ever
the
read
best thing
Alex
they can do
Karp's
is
letters?
I've read some of them. He's eccentric.
Here's what he said this month. We are at the outset, the very beginning of a generational project. Our financial results, those crude and imperfect metrics by which a market filled with both excitement and fear attempts to assess the value of companies it covets, have again exceeded even our most ambitious expectations. A little disappointed he didn't call out the drug sniffing short sellers this time, but that's who he is. That's who he is. But look, the stock's down to 130. It's still on like a 30% drawdown now.
Couple quick hitters from this week because we're not going to be able to get to all of them. Roblox is up 20% today after their report. I almost admire Roblox in that they do seem very committed to their mission. Like they seem very focused on growing the business, growing the platform. We're not buying back stock. We don't care about that. We are, I don't know, stock-based compensation continues to go through the roof. It's kind of shocking. They have more, get this, $1 billion in free cash flow. Actually, let me pull up the exact numbers for you here.
And they reported at this afternoon for when we were recording.
Last 12 months, $1.4 billion in free cash flow. Can you guess their operating income?
100 million.
Negative 1.2 billion.
Wow, all SBC?
Majority
I think they
SBC.
have a little work. Oh, wow.
I think
Well,
I think they have more than a billion in stock-based comp. I'll double check, but I'm pretty sure.
but their hours spent on the platform are growing 88% year over year. So I mean, clearly it's
That's what I
working
mean.
in some capacity. Yeah, so
I
decent,
mean, they
decent.
are committed to their mission, and they kind of don't seem to care that much about like shareholders. Not in like a disrespectful way, but they do seem to tune out the noise fairly well.
Yeah, there's a difference between tuning out the noise and like not caring about actually creating value and just wasting money. Roblox, maybe in the other category. It's just a company you don't hear about much anymore. I who's using it? Maybe it's all kids. It's really hard to grasp.
But the daily active users are insane. I mean, I think it's 150 million. Let me. Yeah, daily active
Click.
users last quarter was 144 million. That's a
A lot of
huge
room to
number.
grow. I do Facebook's 3 billion. That's the path. That's what they think.
Yeah, I guess.
He kind of thinks he's the guy that invented Ready Player One. That seems to be the vibe.
Yeah.
Or is going to invent something like that.
Reddit, good report. Would you ever invest in Reddit?
Who's running it? I don't know. Seems
I
it's
actually have no idea.
interesting business for sure. Yeah, but I haven't looked at them closely. It's kind of one of those where I just assume, it's gonna be a crap co. What about someone was asking about Nintendo? I don't know if there's much to say. Units seem
You're
fine.
so
Stocks down.
you're so down. You're so down bad. There's nothing left to
Yeah.
say.
Well, there's not much to say because I it's kind of as expected. Like they're selling a lot of hardware. Not sure why the stock is falling. They'll eventually release more games and people will buy them. That's kind of my take.
I'm trying to think of any other big reports from this week. Uber.
Well,
I might end up buying Uber.
it was, yeah. If it keeps falling,
It-
I've been helping out a lot down here. I'll tell you that much.
I just don't think. I don't think the AV threat is going to displace them.
Waymo's at 100. What is it? 400,000 a week now. I know they're still very small. They're
But
going to Sacramento.
I think there's a lot of validity to that chart they share of like needing flexibility in terms of driver volumes. Like you don't
Sure.
want to oversupply, which if you're Waymo, you're going to oversupply potentially, and you don't want to undersupply, and there's massive surges in demand for Uber. So you kind of want the flexibility of drivers being able to click on and off, plus some Waymos.
Yeah, that's a fair point. It's definitely a fair point. And overall, I mean, they're at 200 million MAUs. Probably can keep growing. Trips up 22%, bookings up 22%, delivery bookings up 26%. EV to EBIT is 29. It's not that cheap, but they're still in the middle of their operating leverage story. So maybe if you expect like margins to double, it's fairly cheap here. On the whole, though, I'm not sure how. It's not like Adobe, if you kind of get what I'm saying.
No, I mean they've optimized the P&L a little better, it seems, and they've actually done a good job. I think stock-based compensation is like flat over the last couple of years.
Yeah.
Which
And you know who else is over the last few years? Wix. True free cash flow coming in. Little tease for the newsletter. All right. Well, we're going over a couple minutes here. Let's see. Was there any other bubble watch? Now we kind of hit those throughout the episode. People I know asked about coupon. Look, stocks falling. We'll talk about them after the quarter. That's
let's end
about
with
it. And
this.
Ryan, anything else before we get out of here?
Let's end with this. The software meltdown of 2026. You have to buy one enterprise SaaS company. Who's it going to be, Brett? Go. Don't look at prices. Close your eyes.
I can't even. I'm looking at the list that you have here. I don't even know all these companies. I would pick. Oh gosh. Adobe. But
Okay.
they're also different. Maybe Atlassian. It's so I don't even know what any of them do. So I can't even, and I have no idea what any of their valuations are. I can't even tell you.
I'll tell you what they do, Brett. They grow. They grow the top line. That is what they do.
That's it.
All right. I think that's going
they
to
have
do
very
it.
pretty charts.
Yes, they do. I think that's going to do it. Thank you, everyone, for tuning in this week. We will be back next week. Plenty to talk about again. Earnings season is busy as it can be, and it seems like we have an endless flow of news. But thanks again for tuning in. We want to remind listeners that Brett and I are not financial advisors. Anything we say or discuss here on this podcast is not formal advice or recommendation. We may buy, sell, or hold any of the securities discussed in this podcast. Thank you all for tuning in. We'll see you next time.